Welcome to the Video CPA. It's good to be with you today. Today we're going to talk about an additional 2020 tax change. This one has been kind of overlooked. It was part of the CARES Act that was passed during the spring of this year, and it's for charitable contributions. I'm Michael Scott. I'm your host. I am the Video CPA. I've been a CPA for 45 years and a CMA, Certified Management Accountant. Also have a master's degree in accounting. So I've done a lot of tax work, about 45 years of tax experience. And so I enjoy putting on these little tax videos for you. And if you got any questions, just leave them in the comments section. But before we get started, we've got our usual disclaimers here. The affiliate marketing disclaimer. If you buy anything from some of the affiliate links on this channel, we get a commission, and so you need to be aware of that. Also, the educational disclaimer says that we do the best job that we can in getting this educational materials accurate, but you have a responsibility to make sure that you study them out as well. All right, so this particular deduction is only a $300 deduction. They used to have a deduction like this many years ago, where with the standard deduction you could take a little bit of your charitable deductions as well, because it helps out charities. And as they raised the standard deduction several years ago, people haven't been donating as much to charities, and so charities, some of the charities are kind of hurting, especially with COVID and stuff. So in the CARES Act, they put this deduction in, and it says that if you take the standard deduction, you can take, in addition to the standard deduction, up to $300 worth of charitable contributions, as long as they're to a qualifying charitable organization and they meet the requirements of documentation requirements and things like that of charitable contributions. So you need to be aware of that. Who can take it again? If you're itemizing, of course, you'll take your charitable contributions when you itemize. So this is for people who take the standard deduction. All right. Normally with the standard deduction in the past, you haven't been able to take anything else with it. But now with this charitable contribution, you can take up to $300 in addition to the standard deduction. All right. So, and you know, the reason for this, I mean, the IRS estimates from 2018 that 87% of taxpayers took the standard deduction, which is much higher than what it's ever been in the past, and it has affected charitable giving. And so this has been added to the law to help some of the charitable organizations and to give taxpayers a break. So up to $300 if you take the standard deduction. All right, it's got to be a qualifying cash contribution. So let's talk about what that means. First of all, it's got to be cash. It can't be in kind. So it's not your clothing that you give to Goodwill or anything like that. It's not your household goods that you take down to some other organization like Salvation Army or something like that. It's got to be in cash, which means it's either cash, it's check, or it's credit card. And so the deduction has to be cash, defined as cash. It also has to be to a qualifying organization. Now, so the IRS has developed this tax-exempt organization search tool so that you can find out whether it's a qualifying organization or not. Now, most things that have been charitable organizations in the past still qualify. Certainly churches do, things like that, but they recommend you use this tool. I went out and looked at this tool and did a few searches on it, and I couldn't find anything. But in order to use this tool, you need either the tax identification number that you're going to donate to, of the qualifying organization that you're going to donate to, or you need the complete name, or at least part of the name, okay, so that you can do a search on it. And then you can do the search, and if it shows up, well, that's a tax-exempt organization that qualifies under this for this particular deduction. Okay, So you need to make sure your organization is eligible to receive tax deductible donations. All right. How do you take the deduction? Now, the 1040 for 2020 has been issued in draft form. That means it could change. But on the front page of that 1040, line 10 is for other adjustments, adjustments to income. And so on line 10B, it has this deduction listed. And so in your tax software, you just fill in that line for $300 or $250 or whatever it might be. Or if you're doing it by hand, you just write in your amount on Form 10B, and hopefully not too many people do it by hand anymore because free software is available through the IRS. But so that's how you take the deduction. It's pretty easy to take, but like other charitable contributions, you still have to have documentation for it. You've got to have something that backs it up. So when you give this deduction, when you donate to this organization, you need to make sure that you get the organization's address, their name, their tax ID number, the date that you gave it to the organization, and the amount that you gave to the organization. And you need to have that in hand when you make the donation. Okay. And you can make as many donations as possible, but it can't be more than $300 to get the deduction. At the end of the year, then, these charitable organizations, however member you donated to, whatever the number, should send you a statement that gives you the information that I just mentioned, and it gives you a summary of all the donations that you've made that year and the dates of those donations to that organization. Okay. And it also needs to say that you did not receive any goods or services in return for this donation. And there needs to be somebody that attests to that fact, so it has to be signed. So make sure on any charitable donation that you get, and it doesn't matter whether it's for this $300 or you're itemizing or whatever, the requirements are the same. Make sure that you keep that information and that you have it, because if you are questioned and you don't have contemporaneous information or contemporaneous proof that you made these deductions, they're not going to give you the deduction. So that's very important. Make sure you've got the documentation for this deduction. All right. So a short video. That's it, basically. That's all we're going to talk about. It's a good deduction. I mean, $300 is $300. I mean, it's not huge, but it does help, and it's not something that you want to miss. And so if you're making charitable contributions, it's something that you can get. And as a tax preparer for 45 years, there's not a lot of people that give over $300 a year in charitable contributions. There are some that do, but a lot of people don't. And so $300 meets the needs of most of the taxpayers out there. Well, anyway, thanks for watching. It's good to have you with me, and I'll have another video out probably in the next week. Thank you again.